Little quick snapshot. CoinShoe, what we do is a decentralized investment bank. We've been going around for a few years right now within the crypto blockchain world. I officially started with the company top of the year, but I worked as a CEO a lot last year when we were in the ICO world. Kind of what I am is like the Gaijin samurai, as they say. I'm American, but I work mainly in Asia. Gaijin means white monster. You guys may know that anyway, so it's kind of a joke on that. But so we transformed into this adaptation in the market with digital securities, where the CEO as well as myself always believed it would go. I've been advising STO projects on a non-financial basis in America since last year. And as the progression changed and we saw the crash in the ICO market, we really expanded our offerings, went full board into that. We registered broker-dealers with our offices in Singapore, Hong Kong, the US, as well as partnerships across the rest of the APAC territories. Always looking for more, especially in Europe right now. We also have an end-to-end STO platform with, that's registered right now in Singapore, except for the exchange part. Only one exchange has got approved there. But where we do full issuance tokenization, we have a fully modular API interface for custody, OTC, and everything else, other STO providers, and then a full end-to-end exchange with military-grade technology. It's a fully institutional-grade exchange. And that was built by one of the main security guys from the India Stock Exchange, so it's very high-tech. And we have partnerships with Securitize, who are here, Polymath, Open Finance as well in the US, Ledger, on our Asian side for custody, Gibraltar Stock Exchange, and a number of other great partners. Obviously, we do that because with this new kind of movement with regulation and blockchain, which I was always a firm believer of, believe that ICOs should have been better regulated, hence why we had a big crash. There's no way to scale unless you have insane amount of money. So maybe tZERO can do it a lot quicker, right? But majority of companies, including shares Coach, who I just presented with in Tokyo, you need to have partnerships if you want to scale, or you just focus on your jurisdiction. So to meet customer needs across the world, specifically in blockchain decentralization, where everything is kind of in this interweb structure, you have broker partners with broker dealers, you have other partnerships with exchanges, correct? So like our platform right now already has Polymath and Securitize integration within it. So when our exchange is ready to finally launch, they can plug and play directly in. And that's kind of everything that we're doing right now in a quick nutshell.
Great. Well, you have a lot of experience in this space. So can you first talk about what is the current status of the STO market? Where we have been last year through today, and then how do you see the rest of this year? We'll talk about the future later, but let's just focus on what happened so far and what happened this year.
Sure. So to start at a really high level, a security token is really just an automated financial contract. And this contract represents a fractional ownership share in a real-world asset. And so by putting a digital wrapper around this asset, you're able to program a range of financial ownership and utility rights directly into the token. And so, I think that in a lot of ways, this is the next evolution of the ICO market, whereas, we were all here for the mania in 2017, but I think that clearly there were a lot of issues with offering a non-dilutive financing mechanism for a platform or network that doesn't exist or doesn't really have any utility. So this is sort of the next evolution of that, where you can actually get some investor protections and it really starts to look like an actual security. But really, I think that this entire wave actually got started back in 2012 with the passing of the Jobs Act, which really enabled a whole new wave of innovation in private capital markets in terms of how companies and entrepreneurs access private pools of capital. And so, we saw a lot of experimentation going with equity crowdfunding and peer-to-peer lending. And I think that in a lot of ways, STOs and digital assets, smart securities, whatever you want to call them, are really just the next evolution of that. And so I guess I can give a little bit of background about the overall lay of the ecosystem currently. I mean, really, it's going to look or rather it's going to resemble that of traditional capital markets, meaning that, so you have the pre-offering stage. If you want to offer a digital security, you have to work with your legal firms and broker-dealers to ensure that your offering is regulatory compliant, and there are actually sound financial incentives for investors to participate in your offering. Then you have the sort of primary issuance phase, which there are companies providing the technology stack to actually issue the token, and there are companies that are also providing a platform for these companies to go out and raise capital from international investors. And we're seeing a huge appetite, particularly for international investors, to invest in US-based assets, and I'm sure you'll be able to speak to that in more detail. And so really there's a lot of companies that are experimenting with owning different parts of the value chain and offering comprehensive solutions that include sort of compliance and regulatory technology that is built directly into the protocol of the token, as well as custody and underwriting solutions as well. And so that pretty much sums up the ecosystem. You also have in the secondary markets a range of ATS systems that are launching, as well as bulletin board systems for people to trade assets directly peer-to-peer, as well as custody to safeguard the assets. And I think that it's pretty much a broad overview of how I conceptualize the market right now.
But what about this year? How do you see, compared to so far and then going this year, do you see a significant improvement, increase in activity?
Sure, yeah. So, back in December of 2018, we saw the first ATS go live in Open Finance, and there's really about probably a dozen tokens that are live right now, and I think a lot of them are tokenized private placements or tokenized funds. But I think that in a lot of ways, these haven't gotten much liquidity, and there aren't really a ton of liquid tokens that are trading at the moment. But in a lot of ways, I think that these metrics are the wrong metrics to be asking at this time, right? Because there's a lot of innovation that is going on, and there's been a wave of entrepreneurs rushing to build infrastructure to help the ecosystem scale and really support it. And so, while development thus far has been very gradual, I think that over the next 6 to 9 months, and in the subsequent years, we're going to see a wave of new companies coming on board and offering tokenized offerings. And the way that I like to think about it is that it's gradual in the beginning until it happens very suddenly. And what I'd like to say is that the day that Andreessen Horowitz announces that it is tokenizing its funds, within 3 to 6 months, the entire venture capital industry will announce plans to tokenize their funds as well. And so I think that while development has been gradual thus far this year, there have been some signs that are very encouraging, and I think that that's only going to accelerate into the future.
You just realized, you mentioned gaijin. I know you have a lot of Japanese experience, and maybe you can share about your Asian perspective.
By the way, not stories.
Hong Kong people are quite low instead of gaijin.
What'd you say?
Quite low.
Quite low, yes. So what, touch on what's going on more in Asia right now?
Right.
Look, Asia has always been, within crypto, blockchain, the best market. I had a meeting yesterday, wherever you are, and finally I had one Asian guy, first time ever, who agreed with me that's because of the gambling is part of the culture within Asia, which I love myself. So that's my theory. I finally got validation, right? Okay, so there we go. So it's been very big in Asia. In the US, it was great, but in the US, the regulation happened. So all of a sudden, you had this influx of American and then even European companies wanting to go to Asia, which was great for me because I was like the liaison, right? So I brought a bunch of big companies from here in the US, from Europe, even in Malta too. We should talk after because I have partnerships. I know Silvio very well and all that stuff. And, and it became, a phenomenal place. Then we had the regulation and the market crash. So everyone's scrounging around. Now we have the STO, which is great. Right now we have a horrible amount of bad information in the market and lack of education where people think ICO and STO is synonymous. Really, what I've kind of been leading right now, it is kind of like a preschool level that all we are talking about right now, even forget STO, DAO, smart security offering, all we are talking about right now is Uber in the taxi industry. Plain and simple. That's all we're talking about now with blockchain in the financial world. It disrupts, it finds solutions, settlement time, all that stuff. It saves tons of money, programmable stuff, which obviously there's going to be developments of that, but really that right now in essence that's all we're talking about. And I think we're in the very pre stages of an industry that I believe is going to completely revolutionize the world, specifically within this stuff. Utilizing blockchain, again also with machine learning and stuff like that, would have prevented our crash of 2008 that literally our government and financial Wall Street where we're at right now caused, right? Not scammers in the ICO market, right? Not regular Joe Schmoes, literally our government caused that in Wall Street. Utilizing blockchain properly with obviously big data machine learning, if you track stuff, right, being over leveraged, that would not happen. That is a big statement. That's literally why I got into blockchain, right? So how does that fit into Asia, right? Asia still loves gambling. They love crypto. There's a big investment there. It's not as big as it was right now with the STO market because people are still looking. What is this? So we do road shows across APAC. Another one starting in May. We just did it in March, and we had some great U.S. companies or projects come out with us. And you know, investors, institutional funds, everyone's coming out, but no one's really like writing checks on the spot. Why? Because there's no liquidity in the market. There's really, as someone just said, there's no really exchanges happening. There's not much. There's no ROI really coming in right now. It's very exciting. Everyone believes in it. I do believe once the development happens in this industry that when that institution like opens that door, it's going to be very fun and very exciting and very lucrative, I think, for the market. I just believe still right now, the U.S. is definitely leading in this world, which I'm excited about because I left the U.S. like a while ago in this industry because the U.S. just shut it down, the innovation. I get it, you know, there needs to be regulation, but we also have to really look at what we're really touching on right now with this, with blockchain technology. We're literally touching the strongest powers in the world, right? The Federal Reserve and every other institution around the world. We're talking about major stuff there. They're not going to let that just, they're not going to give that share away of those revenue streams, those control. So it's kind of, I think we're on a very exciting place right now.
So what are the challenges to make STO mainstream? Is it lack of quality companies that are, you know, issuing the issuer, you know, lack of access to traditional investors? So what are some of your?
No, it's really, we're just in the beginning stage. So it's
okay, what can we do to?
Well, all we can do, basically what it is right now, what's really technically in a sense holding this, which is just like an ICO world, is regulation. That's all it is. But there, I believe it's fair with the regulation because this is really complicated stuff. It's not just saying, okay, great, let's open up secondary markets, let's do that. I mean, yeah, I mean, who knows? It looked like the ICO rush, crash, and boom, right? So I believe that's right. But all you can do right now is one step ahead, you know, 2 steps ahead, 1 step back, right? Like you said last night with the Farber thing, right? But really what's holding it back now is regulation, bottom line. Because regulation would let us move forward, which then would open up the market for more projects, more funds, a secondary market, right? So what actually is the driver of that, or what's the gatekeeper? Regulation being figured out, right?
So you think regulation, what about you?
Yeah, so I definitely agree with that. I think when I think about the challenges that the industry is currently facing, to me, it's really threefold. Regulation, education, and underwriting. And so, you know, right now the SEC has, you know, taken a stance where they want to protect investor rights, but they also have indicated that they are, you know, very pro-capital formation, right? Like staying true to their mission. And I think that there's just a lot of ambiguity in terms of how these assets are going to be regulated that we really need clarity on. So, you know, do we need licenses for transfer agents? What are the rules that are going to be put in place about how to custody these assets and how they're traded and marketed in the secondary? And so, you know, I think that, you know, regulation is certainly going to be a driver of progress in this market moving forward. But it's also really education, right? And it's like when you think about it, thus far, there's almost been a product market fit issue for security tokens. And I was at a family office event earlier this week that was all education focused, but the actual capital allocators that are going to be built, you know, buying security tokens and building the demand side of the equation are really, you know, just trying to catch up in terms of how do you digitize an asset, right? Like, what do you mean by that? You know, asking really, one-on-one level questions, and that's where we are right now, right? I think that a lot of people in this room are probably in the weeds of how blockchain works and and how we can really move the industry forward. But I think that you have to take it a step back, speak in terms not of blockchain and crypto, but putting it in terms that these institutional investors are really going to understand, and ultimately the quality of the deals that come to market. The last bucket was underwriting. The quality of the deals that come to market have to be better than what is currently existing, right? And so, a lot of the applications that I'm most excited for are the ones that didn't currently exist with the previous technology. And so, we mentioned, JD mentioned the Farber deal, and there was a pretty high-profile instance this week of one of the major security token issuance platforms having a deal not go through. And basically, the investors in that deal were unable to agree to the terms with the mortgage lender. And so I think that the two steps forward, one step back metaphor is spot on. There's a lot of experimentation and a lot of innovation that's going on, but really we have to figure out which models work and are able to gain traction with investors.
I'll give you my perspective as an investment banker and former private equity investor. As an investment banker, you do M&A, most important finding good company to buy. There's no good company to buy, nothing to buy.
100%.
So I think we need better, you mentioned that, better quality of STO company issuers, right? Secondly, as a private equity investor, usually when you do a major investment, the terms are usually much more customized beyond the typical, I think, what STO offering. Standard, vanilla, everybody the same terms, So I think that's part of the challenge, is how to balance the need for some of the more sophisticated private equity investors and the standard offering of STO, kind of like an IPO stock offering, vanilla stock. I think that's part of the challenge. And the other thing I noticed is that you look at talking about STO, look at all these articles, the biggest STO issuers are the STO issuers, are the platforms. You look at the history of the last year or so, right? All the high-profile STO are tZERO and SpiceX, all these players. We need to, again, I think we need to get beyond that. But going back to moving forward, so what kind of companies do you think will do well, suitable for STO, at least in the short term? Startups or more established companies, or both, or doesn't matter? What is your company looking? You are an investor, right? What are you looking for?
He's looking at you, by the way.
Right.
Yeah. Yeah. Absolutely. So, in terms of the profile of the company that we see generating a lot of success with their security token offerings, are typically later stage companies. Right, they're companies that have typically already completed their seed and Series A, and maybe looking to offer tokenized equity in Series B. I think that there are a lot of sound business reasons why you would do this, right? Because later stage companies typically have revenues, they have cash flows, and we have established valuation methodologies for how to evaluate these companies. Whereas if you're going to go out and raise capital as a startup, a lot of the value of that token is going to be speculative by nature, and you'll see a lot more volatility in the market for that. And so I think that in general we want to avoid that. I think you're right that a lot of the value that we're seeing right now is at the infrastructure level. I think that you certainly can't go wrong buying equity in high quality infrastructure companies at the moment, because I think that in general, once Wall Street realizes the full potential of what's really going on here, the new revenue streams that can be generated by this new asset class, you're going to see within the next 2 to 3 years a wave of M&A activity of legacy companies that have kind of been waiting to get involved in the ecosystem and trying to figure out how they can generate value from this ecosystem, and they're going to be faced with the question to build or buy, and they're going to be buying.
How about you, JD? You bring a lot of company on roadshow, but you're helping out and all that. What kind of companies are these?
It's a good, I was actually wanting to almost interrupt you guys, refrain from that impulse, but we are actually seeing creative offerings. They're not all of them are vanilla. People are getting very creative, and we have, and we're structuring, it is a security, but structuring preferred payments in something where it's like a bond and debt, right? So the payment structure is way more, lowers the risk barrier, right? Things like that. Obviously, it's not a pure bond or whatever, so you know, you have the whole bankruptcy, you're still at the bottom as a security, but, so they are getting creative things, but we're having companies, first I'll touch on what kind of companies, and then what I think are doing the best right now, which I think we all know is real estate, right? Anything that has a real hard asset right now that's simple, boring, vanilla, stable is the ones that are moving right now with STOs. In Europe, in those kind of funny markets, as we say, you have a lot of pre-rev, pre-user startups, right? And we'll see how that market in Europe, you know, if you go on like ICO Bench with their 500 million that's been raised on their platform for STOs in the past few months, you know, anyways, that's a whole other panel on that shit. Excuse my French. So we have a construction company in Hong Kong with a 40% market share, rents out most of the equipment, right, to all the big, you know, Hong Kong's under construction like every day, right? So they have a 40% market share. They tokenize the fund to buy more equipment. That's a great, promising, you know what I mean? And we had investors.
So this is a debt fund that they are offering?
No, it's actually
it's a security.
No, they're still tokenizing a security, but around a fund to buy the equipment, backed by the assets.
Right, but but this is the fund just to buy the.
Exactly, but it's still backed by the assets that they buy the equipment, right?
So they're using this fund to finance some of their construction needs.
Yeah.
It's a construction company.
No, they rent the.
Oh, they
rent like cranes, all that stuff, right? That's a very great business model. They're already generating revenue. They've been around for a while. They have a 40% market share, right? We had a startup actually, but it was a gaming startup, and they had execs from the U.S. with all the big names. That Asia loves that still. You know what I mean? I would say if you're a startup right now, don't try to do an STO unless you have some big names behind you, and even then it's difficult. I still would go try to do maybe an IEO or just go back to normal and raise some money, like everyone else does with equity, right? But they had some big American names, which Asia loves, especially Japan. They love America and that stuff, so we felt comfortable. We do all our due diligence with our investors prior and ourselves. We don't just take anything on the road because our reputation. Also, we want to make sure it works good. So we've had the startups. We had an exchange out of Gibraltar as well. We had a fund, a tokenized fund out of Europe. We also had oil and gas out of Texas. I can keep going down this. So we've had a very diverse amount.
You brought up one point that I keep hearing with the new generation of people into STO. Everybody take their due diligence very seriously.
Not everyone, but
no. Well, the one that they're really serious about. You know,
there's certain countries I won't name right here.
But I'm talking about as an investment fund
right.
or the platform and so forth, because you don't want to go for the effort to try to raise money for some company. When the ICO days, anybody, right?
Yes.
So, but a lot of people are saying the differentiation is the due diligence team. After you've gone through that, they can bring you, to the right investor and so forth.
Mm-hmm.
So, what about for longer term for STO? When do we get to what's the term, 10 trillion?
Tomorrow, right after we're done with this panel. You want to take that one? Need something to drink.
Yeah, sure. Yeah, so I mean, I think I generally agree with the timeline that the previous panelists laid out. I think that the saying rings true that you tend to overestimate what you can do in a year and underestimate what you can do in 10. I think that the future is incredibly bright for security tokens and digital assets, and the rate of innovation here is only accelerating. And I know that the previous panelists mentioned that it was going to be evolutionary, not revolutionary. I think that's true to an extent, but when you think about the full picture about what's really going on here, when you merge the emergence of digital assets with some of these decentralized financial protocols that are coming to market, the opportunity is immense. Because take for example a protocol like MakerDAO, where you currently you can get a collateralized loan for your Ether by locking it up in the protocol, and you're only paying a couple hundred basis points for interest rates. But what happens when that is expanded to all digital assets or any ERC20 tokens. Imagine you have a tokenized interest in a venture fund, a limited partnership fund that typically have long 7 to 10 year lockups. What if you could lock that up, get a collateralized loan on your stake in the venture fund, and use that to go leverage long ETH or put that capital to work in some other investment? What you've done is drastically reduce the cost of capital for companies, investors, and entrepreneurs, which I think that we're going to see a lot of new and innovative applications of that technology coming to market that can potentially drastically alter the landscape.
Right. So I guess also from what we were just talking about, you mentioned the regulatory environment is not mature, and then the technologically also the next panel we're going to talk more about the technology. But I think in a way we're really still at the infancy stage.
Before infancy.
Before infancy.
I have a term I use, but I'm not going to say it in public.
Yeah,
we're way, they haven't gone on a date yet. Let's just say that. That's what I think we are. But to me, and I think obviously everyone else is here, and some big people are involved in this industry, this is one of the most innovative industries and things I think that's happened in many years, like the internet.
Right, I mean, I agree with you. I think it's not a matter of years, it's when. Right?
Yeah.
And I think when the regulatory environment, technological environment, and educational process are underway, then I think we will see significant breakthrough. I think we need some critical mass and some big success story to take us to the next step.
Just one more point on regulation. I know we're just about out of time here, but I heard a saying yesterday that regulation leads technology, not the opposite way around. And so I think that we need more proactive legislative examples from the SEC and other regulative bodies to really influence the direction of this technology, and they can really make it backwards compatible with those sorts of regulations. And so
right. And actually, you brought up another point. As a traditional investor, when you traditional investor don't look at the deal, the company you're buying, the business, the value proposition and all that. But this not having a good environment, I find it difficult to do that. So that's what's holding us back.
The U.S. should really open up like a really large sandbox regulatory environment, right? Something that's like cap limited, that gives us an opportunity to go play around, right?
Exactly.
You have these regulations, it creates too much risk for companies to want to do this. Only people like us who are this nuts, who are ready to put it all on the line and just go, fight for this, are going to do this. For the rest of the market,
I got a signal that time is up.
Okay.
So I really appreciate both of you coming. A round of applause.